Here we try to provide a bit of a perspective on what happened in the B2B software landscape over the month that just happened. So this is October data. And below you will see year-to-date 2025 that starts to become an important one because we're coming close to the end of the year to try to have a bit of a view on overall performance. What we do here, we take our basket of 266 B2B software companies listed in Europe and North America to try to understand how they are performing overall as a cluster, but also looking at this segment by segment. And you can see that performance reflected in this chart. At the top left, you see the monthly performance. Actually, while wide indices have been on the positive side, 2 and 4% for NASDAQ and S&P 500, actually, when we look at our universe, B2B software has been in negative territory, so it is experiencing a correction. When we look at things in a 2025 year-to-date perspective, we see that trend that is clearly visible for this year, where you can see S&P 500 and NASDAQ up 16 and 23%, while our basket of companies only up 3%. This is to compare versus last year, which was actually a very positive one in terms of performance, but it says something quite important when we start to see those numbers and those divergences, actually to the extent that we looked a bit at our methodology and added a new column that you see right on the right-hand side that we call weighted average. This is looking at our 266 companies in the basket, but not taking them one by one with equal weight, actually weighting them on market cap in order to reflect the fact that the majors actually performed super well. And you can see them in that first column in the middle of the slide. Overall this year, they're up 30%. And if you look at things from a weighted average perspective, obviously they are mega caps, so their weight is huge. And they're actually a very big part of the S&P 500 and NASDAQ indices themselves, which impacts a lot the perceived performance. And so then from that perspective, the message here overall is really a dual one. It's overall in B2B software, there are two worlds this year. The majors that have continued to perform exceptionally well at the back of AI, and some of those mega vendors that have really recovered heavily. For example, we can name Oracle, that has had a very, very strong year so far. But then when you look at the rest of the B2B software universe, it has been a very contrasted one. And actually, when you go segment by segment, for many, a negative one this year. When you look at the bottom at year-to-date performance, some segments are in net negative territory. Looking at segments that are seen as being impacted by AI disruption, looking at ERP, human capital management, accounting, CRM, MarTech, payment, e-commerce, and also segments that are impacted with geopolitical factors, the trade and tariff war that is continuing, and we can see that happening in supply chain management and procurement, which is actually the heaviest hit cluster in B2B software so far this year.